Hi, this is tax attorney Anthony Parent of Parent LLP, the IRSMedic. And in this video, I am going to talk about what you need to do in order to survive the Form 4180 Trust Fund Recovery Penalty interview. And the first thing where we need to start off is, what is the Trust Fund Recovery Penalty? And to think about it, you have to think about payroll taxes. And that when an employee gets a payroll check, it makes sense that the employee takes a look at the check and can see that the employer withheld money, or supposedly withheld money. As far as the employee knows, the employer may not have withheld money. And that amount that is withheld on behalf of the employee is what's called the trust fund. Now, what makes it confusing is that an employer has other taxes that are due. Employer taxes, payroll taxes, and if you're self-employed, you're paying these taxes yourself, but there's other hidden taxes that an employer is on the hook for that most employees aren't aware of. But what this is to do is to, the IRS is looking to take this trust fund penalty, because the IRS is actually crediting this employee this withholding that it never received. So the IRS gets a little fired up about going after people who did not withhold this money. Now, typically what we see is not people who are embezzling money or stealing money, but rather it's employers who run short of cash, and they get in a cash flow bind, and they make a deal with the devil, and they short their payroll taxes, and the cash they thought would come in to replace it didn't, and then the problem steamrolls and gets out of control. Sometimes, and I would say maybe it's 10% of the time, there is employee embezzlement, and there's things that an employer can do to protect themselves from being assessed money that someone did steal. What the IRS is going to do now with a Form 4180 interview, a revenue officer is going to come and ask anyone he or she thinks is willful and responsible for not paying the taxes to come in. Now, particular cases that concern us are when we have, again, when an employee stole the money, that an employer may be able to avoid being assessed this penalty, but oftentimes we see the employer just puts up his hands and doesn't contest it. Another issue is where an employee is the one who is being held willful, even when the employee didn't steal the money or had no financial incentive to do so, or no financial incentive, or not quite any control. Oftentimes the IRS likes to think, well, if the employee had access to the checking account and was a signatory on bank accounts, well, that's enough to be willful. Well, not really. In many companies, there's employees who have access to the checking account, but they are not the ones who can actually put the money in there. And so many times employees wrongfully don't understand their rights and don't understand the importance that this trust fund recovery penalty can get out of control. I mean, a company's entire withholdings can be assessed to an individual. And what's so nasty about it is, unlike regular tax debts, like from a 1040, you can't file bankruptcy to get rid of the trust fund. It sticks around. Now, you can file an offer in compromise to reduce the amount, but you're better off not being assessed in the first place. And the other area that concerns us is where sometimes you will have a whole bunch of people that the revenue officer is looking to assess, and they might have a conflict of interest. And it concerns us when an attorney is representing many people and is giving the wrong advice to one person to claim that they're responsible when in fact they're really not. Another issue is where you have a family business where there's a dispute. You know, it's really important to understand that the IRS is looking to assess as many people as possible, and that it may seem unfair. The IRS is looking to get the money. So if you happen to be not as willful, not really willful at all, but you happen to be the one with a deep checkbook, you know, the IRS is really going to take a look at you. And so that's really an area where you need to take this very seriously. So these are the areas where the 4180. I mean, it is a humongous thing. It is one of the most serious things that can happen to you, and that you should never take it lightly. And that this is a situation with what is at stake, where you really need to get the best legal representation you can, and make sure that whatever legal representation you have isn't conflicted with somebody else who might have a different story. This is Anthony Parent of Parent LLP, the IRSMedic, and I thank you for watching.